What's going on, people? Welcome back to another trade breakdown. So today I'm going to break down one of the biggest futures trade I have taken since making this transition. Now, as you guys know, I used to come from a swing trading background in the FX world, but since moving to futures, I have been more focused on intraday trading and scalping. But gold gave incredible opportunities recently where we have seen phenomenal moves, and the bullish momentum and volume has been absolutely incredible. And I had the opportunity to hold this position for 270 ticks, trading one contract, $2,700. And this video is going to show you guys and teach you guys how to scalp gold, how to day trade gold, but more importantly, how to hold your trades. Remember, you don't need to trade 10, 100 contracts to make good money in the markets. You just need to be able to execute your positions and hold your trades. Catching $2,700 on one contract is an incredible move. You trade 10 contracts, that's 27,000. Absolutely insane. I didn't get to hold full. Boy, I wish I did. But I want to show you guys how you can trade these liquidity levels on gold and how you can start executing holding positions like this. Let's jump straight into it. So this is the trade on gold right here. And as you guys can see, since market opened, gold has gapped up and had an incredible fundamental move. And I just wanted my little piece of the pie, and I got an incredible entry and shared all of the liquidity levels down in the community before even executing this trade. So this trade came just after stream. Anyone who's new to the channel, I live stream in the Discord 7 till about 9 a.m. London time, which is like 4 to 6 p.m. Brisbane time. And anything after that, I always share my levels and show the direction of what we are wanting to take. So I actually got an incredible entry, and at the end of the video, I'll show you guys my executions as well, simply based off the fact that this is a beautiful reversal formation. Now, why is this a reversal formation? This is simply, and this is what you guys have to understand when you're day trading gold. Whenever gold is going to have the next big move up or down, it's never just going to tap into a level of support or resistance once and just push. What you'll likely see is gold will tap into a level once, reject, bring in a lot of buyers, and then spike it down a little bit more and then come down for the retest, and the retest is your entry, and that's when you get that pretty clean morning star formation. So this was gold on the hourly time frame, and I had already marked up some pretty significant levels where I believed gold could come up and tap into before pushing to new highs or potentially technically having a correction. Either way, I don't care. I'm going to take my piece of the move, and that's me done. If we get runners, amazing. My overall plan on gold was on the 5 minute, we had a beautiful double top up here, and then all the way up here, another level where before this moved down, what did we not do? We didn't spike out the highs, therefore that becomes a liquidity level. And then we have overall highs up here where on the daily, hopefully it doesn't skip forward, we were looking for this to flip back bullish on gold and come up and create new highs, which would have been all the way back up here. So overall targets on gold was like 450 ticks. Unfortunately, I didn't get to hold all that way up because when I want to take a new trade in futures, it cancels out the other one unless you have more than one account. But this was the technicals on gold. You know, your daily had broken above this level. You hadn't grabbed previous daily highs. If gold's going to have a next big move up or down, you're always going to come and at least grab them highs or lows before having that real move. So in a bullish trend, rejection and a bottom wick on the daily, amazing. Be buying back up into previous daily highs and then up into these liquidity regions. All these levels were shared in Discord before they happened. But my intraday levels was just scalping these little moves. You know, buying gold back up into this double top is like 100 ticks, which is incredible. You catch that with 5 contracts, it's like $5,000. Amazing in that tiny little move there on gold. Now, reasons for entry. Gold had come down, had that rejection. So all I'm saying to myself at that point is, if we can come down, spike out the previous lows and then close bullish, at any point on a retest, I am getting involved with that position and my stop loss is going below the low. The reason my stop loss is going below this low, because if this is a true liquidity grab to have this retracement, you shouldn't need to break that low. So my stop loss doesn't need to be, you know, all the way down here. Keep your losses small. If we break this low here and I take the loss, but we still keep pushing high, that's fine. I'll look for a better entry and I'll still make back more. Rather than letting my trade go into drawdown and taking a big hit on my account, I'll cut my losses small. 30 ticks, amazing, very manageable. So this is where I got tagged in on gold, and as you can see, we've had this nice move up and we've started to retrace some of this move. And you can also see you got a nice level of liquidity here. Before this had this push down, you didn't grab that highs. Some people call it a fair value gap. I just look at it as a level of liquidity. Whenever price hasn't grabbed a previous high or low before having the real move, that's why I mark on the level. And then this is where I got long on gold on the 15-minute time frame, and management point was going to be as soon as we grab this highs as well. So now that we're getting more structure, I'm able to plan out more levels of where I could be taking this into. And I was simply saying to myself, cool, as long as this 30-minute can break back above this resistance here, I'm going to hold this trade. If in the next 30-minute we close back below, I'll be cutting it straight away. I wouldn't even let it come down here. If this next 30-minute doesn't drive, I'll cut my trade right there for like minus 10 ticks, because in terms of a very simple level, you're creating resistance. So if you go long at a level of resistance, regardless of these liquidity levels, you have to be open to managing your risk, and that's how you keep your losses small. And then amazing, the next 30-minute pushed up, grabbed initial liquidity point. So then I'm going back down to the 15. Amazing, we're breaking these highs, break even. And then as soon as we grab them highs, then I'm already like, I've got 50 ticks on the day. I'm already securing 80% of my position. So I trade 10 contracts, I secure 80% there. That's 50 ticks. If we can run up into these levels, amazing. I'll take off even more. And then as you guys can see, if we go to the higher time frame, we broke up nicely. You're coming back down. You're grabbing previous 30 lows. If you can flip back bullish again, there's your next entry. Came down a little bit more, and then boom, look at that. You never closed below this support. So again, another buying opportunity. I could have and probably should have had buys on the break of this 30-minute high to come up into these levels, because the more you tease around these levels and show these rejections, the more likely most retail traders try and go short here, looking for this play down, because the textbook tells you that's your liquidity region. Amazing, spike up into that. So from this point here, I'm out like 90% of this position. I'm out 9 contracts, up very well on the day. And now I'm simply just letting this position do its thing. If we come back onto where we took this profit around these highs, 270 ticks. Once this thing started moving, because gold was in this overall uptrend, it was an absolutely phenomenal move. And as you guys can see, almost did get my runner, but we survived that wick. And then eventually gold did actually continue hitting to full TP. And around this region, I did actually close the position by accident because I was looking to take a new trade. So like I say, in futures, it will cancel it out. But this was a great move. All liquidity levels were planned out. Like I say, if you look at gold on the daily, look how simple it was. You look back, look left, ended up smashing full TP of like, what, 400 ticks, one contract, $4,000. Absolutely insane. Breaking above a level, bottom wick, still hadn't grabbed any daily highs at any point. More longs, keep buying up into that resistance, and then amazing, you've got a very, very nice move. That right there is the trade. And same again here, the more you start to reject here, the more retails jump in shorts. They put their stop loss above this high, looking for this play down again, and retails get stopped out. Exactly the same, all of these rejections. People jump in shorts here, stops above these highs, price dips down, grabs all the liquidity, and then, that's when you get that big drive, because there's more liquidity in the markets, more volume means bigger pushes. This was an absolutely phenomenal trade. One of the biggest trades I've had since moving to futures, and I'm also proud of the way that I was able to hold this. And for you guys who are maybe transitioning into futures, or you still trade a bit of FX, doesn't really matter. Always hold partials, okay? You get all these Instagram people who show you these 1 to 20 risk to rewards, but in reality, they're not holding full. But if you're able just to hold a small partial of your position, and you catch a breakout on gold where it moves 100, 200, 300, 400 ticks, I promise you that winner adds up very, very fast. I did not expect to be able to hold this position all the way up into these previous daily highs. However, I expect nothing from the markets, and the markets allowed me to hold this trade, and it was an absolute banger of a position. And I'm not sharing this because I'm proud that I made X money. I'm proud of this because I held my position, I stuck to the plan, and I let the markets do their thing, and I let the markets control where my position goes. If it got me a break even, so be it. I accept the risk. I've secured 90% of my position. The runner can hit TP or get me a break even. I don't really care, but it's also an anchor for me to then take a position to maybe go short risk-free. If I want to take shorts from here and gold keeps pushing up, well, I've got my runner from down here, so I don't really care. I'll secure the runner, $2,700. If I take one contract short and I lose 10 ticks, or I lose $100, I'm still massively up on the day. So hold your anchors, hold your runners, and I promise you, once you start doing this, you will see the power of being able to trade with no ego, no bias. You let your runners do the work for you. And that right there is a banger of a trade on gold. Simple liquidity levels, study the elements, go rewind the trade. I posted all the levels in Discord, incredible position. I'll see you guys on stream next week. We'll do it all over again. Peace.